Hello and welcome to a new episode of Funded 360 English. Today this is the fourth episode of the series Fundamental Analysis. In the last session, we looked at the profit and loss statement. As an investor, to fundamentally analyze a company, you need to be able to read through and thoroughly understand the financial statements of the company. And among the three main financial statements of the company, the profit and loss statements gives you an overall picture of the company's operations. Since we are already being briefly introduced to the P&L, profit and loss statement in the last session, we will right away go into the specifics over here. So in this session, we will take up all the real profit and loss statement of the company and try and understand the various terms in the P&L report along with its meanings. So stay tuned, keep watching. Let's have a look on typical P&L statement of Hindustan Unilever Limited that has been taken from the HUL annual report that's given here. Since it's important to familiarize yourself with the layout of the structure of a profit and loss statement, you please take some time to read through this statement by pausing this video. Now that you know that what a profit and loss statement looks like, now let's take up each and every section and try to understand what it means. The first, we can think about the layout. As per the law, the profit and loss statement of every company is required to clearly state the period to which the statement pertains. For example, here, as you can clearly see that the top of the statement, it pertains to the year ended 31st March 2020. That means it's for the financial year 2019-20. So in addition to that, on the top of the corner, you can also find the currency denomination. In this case, the denomination is given in rupees and unit is in crores. So any number that you read in the statement essentially be in crores of rupees. For example, the number 500 in the statement would mean that 500 crores. And the P&L statement of a company is usually divided into 4 columns. The first column is about the particulars. Second one is not. Third one is year ended 31st March 2020 that you can find. And the fourth one is year ended 31st March 2019, the previous year. The particular column consists of the names of the categories of transactions that the company had undertaken. These transactions are represented numerically in the columns on the right. Second column is the note. This column consists of numbers that are assigned to the various categories of the transaction. More in-depth details of these categories can be found in the notes to the financial statements under the number assigned to that. The third column is the year ended 31st March 2020. You can find there. So this column consists of all the amounts pertaining to the current financial year in question, which in this case is 2019-20. And the fourth one is the year ended 31st March 2019. So all the amounts pertaining to the previous financial year are mentioned in this column. Here it means the year 2018-19. The next section is income. The income header consists of 2 primary subcategories, namely revenue from operations and other income. Let's discuss both these things. The first one is the revenue from operations. This is also called as the top line of the company. This header consists of all the revenue earned by the company through its primary operations. In our case, since HUL is a manufacturer of FMCG products, it derives its revenue from the sale of its various products. Here is a snapshot of the relevant note that goes into the further details. So looking at this note, you can see that company has also been rendering service to its customers and deriving income from it. This has been classified under the head other operating revenue, including other ancillary income from its day-to-day operations. The second one is the other income. The income generated by a company through activities other than main business are categorized as other income in the P&L statement. So let's have a look on this relevant note to understand exactly what this header is meant for. As you can see, the company has generated dividend income from its investment in its subsidiaries and also through various investment options like interest. All these activities are not the part of company's main operations, so that has been classified under other income. And finally, the total income. So by adding both the revenue from operations, here it's shown as 38,785 crore rupees, and other income, that is 733 crores. Adding both these, you will get the total income of the company, which is 39,518 crores. Next is about the expenses. As the name suggests, the expense header of the P&L statement contains all the expenditure made by the company in a financial year. Usually, these expenses are classified according to the nature of expenses. So, let's discuss what are the type of expenses and how it has been presented in the P&L statement. The first one is the cost of materials consumed. This line item pertains to the cost of raw material used in the manufacture of the company's products. Second one is the purchases of stock in trade. So this includes the cost involved in purchase of finished goods for the purpose of trade or in the case of resale. Third one is the changes in inventories of finished goods. That includes the stock in trade and work in progress. WIP, you can find that. This line actually pertains to the changes in the opening and closing inventories of finished goods or stock in trade or work in progress items. One another item you can find is the employee benefits expenditure. All these costs incurred by the company for the benefit of employees are consolidated, and this can be found under employee benefit expenditure tab of the P&L statement. And here you can find the breakup of various expenses under this tab that has been given as note 29. Other head is the finance costs. So this is also called as the borrowing costs. These are essentially interest expenditure and other ancillary costs that a company incurs when it borrows funds. The breakup of the various finance costs incurred by HUL, that is presented in the note 30. I hope you can find that there in the second line. One other type of expenditure is the depreciation and amortization expenses. We know that any asset, whether tangible or intangible asset, that loses its value over the period due to the wear and tear. When it gets old, it depreciates. That's a simple term. This loss in the value of a tangible asset, that's generally called as the depreciation. The loss in the value of an intangible asset, that is called amortization. Since the assets of a company reduce in value every year, the relevant loss is accounted for the P&L statement as an expense. So in this case, HUL has incurred depreciation and amortization expense amounting almost rupees 938 crores during that particular year alone. Another type of expense that has been clubbed together as other expenses. The auxiliary and miscellaneous expense incurred by the company are clubbed together under the header as other expense. You can find that in note 32 of the financial statements of HUL goes into the details of these items and gives complete breakup of all the other expenses incurred by the company. Then comes the total expenses. So adding up all the expenses we have seen above, it becomes clear that HUL has incurred an expenditure of rupees 30,229 crores in that financial year. Other head is about the profit before exceptional items and tax. The amount that company ends up with after subtracting its total expenses from its total income, that is called as profit before exceptional items and tax. Here, for example, HUL profit before exceptional items and tax, that is 9,289 crores, because we are subtracting 30,229 crores from 39,518 crores. Other thing is about the exceptional items that are net. Any income expense that is unusual or non-recurring, that means non-repetitive, but still arising from normal day-to-day activities of the company, that is usually called as exceptional income or exceptional expense. All the exceptional income and exceptional expenses incurred by a company are netted off. So this net amount is then adjusted against the line item profit before exceptional items and tax. to end up with the PBT, profit before tax. Yeah, and also you should understand that if the exceptional items of a company exceeds its exceptional income, the total of the exceptional items is reduced from the profit before exceptional items and tax. Similarly, if the exceptional income of a company exceeds the exceptional expenses, the total of the exceptional items is added to the profit before exceptional items and tax. Now let's take a look on note number 33, which clearly lays out the exceptional items of HUL's financials. As you can see here, the exceptional expenses exceed the exceptional income. So after netting it off, HUL ends up with 197 as exceptional expenses. That means deducting the exceptional expenses from exceptional income. Another term you can find there in the P&L statement is the profit before tax or PBT. So the net of the exceptional items is reduced from the profit before exceptional items and tax to get the profit before tax. So in this case, the PBT or profit before tax is rupees 9,092 crores because we are deducted the 197 crores from 9,289 crores. One another item is the tax expenses. The tax expense header generally consists of both current and deferred tax payments made by a company in a financial year. Deferred means that's last year's or previous year's tax that has been delayed due to some reasons. So according to HUL's P&L statement, we can see that the company has made current tax payments of a total of rupees 2,202 crores and a deferred tax payment of 152 crores. One other term is the profit for the year or profit after tax. So this is also known as the bottom line of the company. Bottom line numbers, you probably have heard that thing in many business channels. Bottom line growth is this much, top line growth is this much. Okay, so this is also called as the bottom line of the company. The profit of the year, that particular year, is arrived at by subtracting tax payments from the profit before tax. That means PBT minus tax, that is PAT, profit after tax. Here, for example, you can take after deducting the tax expenses, HUL's profit of the year stands 6,738 crores because 2,202 crores and 152 crores has been deducted from a total of 9,092 crores of profit before tax. Another item is the earnings per share, EPS. Companies generally like to include earnings per share, EPS calculations in the P&L statement. This is done to give investors and potential investors an idea about how much each equity shareholder of the company would stand in to gain if all the profits were paid out to them. So the EPS is calculated by dividing the total profit of the company by the total number of equity shares outstanding. So that's all for this session. That means just familiarizing the terminologies that's in the P&L statement. That's what we really intended for this session. In the next session, we shall try to explore with these P&L statement and with these numbers how best we can do fundamental analysis or how best we can analyze a company for investment. That's all in the next episode. So before we wind up, let's quickly recap what all things we have discussed today. First thing is about the profit and loss statement or P&L gives you an overall picture of the company's operations. And second point is P&L statement that shows all the revenue earned by the company through its primarily operations and the income generated by a company through activities other than its main business. Third point is the expense section. That section shows you the cost of materials consumed, purchases of stock in trade, the changes in inventory of finished goods, employee benefits or other expenses, finance costs and depreciation and amortization, that all things. The fourth point that we have discussed is the net of all expenses and the total income gives you the profit before exceptional items and tax. Similarly, summing off the exceptional items from the figure, you will get the PBT, that means profit before tax. Also, deducting the tax expenses from PBT, that means profit before tax, that gives you the profit for that particular year or the profit after tax. And the final point we have discussed is the EPS. So EPS or earnings per share, that is calculated by dividing the total net profit of the company by the total number of outstanding equity shares. I hope you got an idea about that basic terminologies associated with P&L statement. So see you in the next episode. Never miss the next episode. Till then, bye from Anup.